Good evening, everybody. Hope everybody's having a nice fall evening. Starting to cool off a little bit here in Pittsburgh. All right, let's take a step-by-step analysis of what we were looking at the end of Friday. Kind of an indecisive trading day. Dow hadn't got to new highs. So it put us in a situation, or at least the doji rule, that if it opened lower, they're probably going to trade it lower. If it opened higher, they're probably going to trade it higher. Now, the rhetorical question is, well, with the news out, of course it's going to trade lower. But that's what we want to know. Is if there was news out that was making the market trading lower after a doji, then more than likely it was going to trade lower for the day. But that puts us into a very simplified process of saying, all right, was this a major reversal, market selling off? Well, it takes a matter of maybe no more than 10 to 15 seconds to flip to your NASDAQ chart, and we can see what was happening in the NASDAQ chart, opened on the T-line and trading positive. So if that's occurring, what's the general assumption? It's basically saying they're not selling it off, they're actually buying after the market for the NASDAQ open. And the S&P, traded lower, but really didn't do a whole heck of a lot once they opened it up. So with that combination analysis, our assessment can be, they weren't really selling it off. They were taking profits. They had some bad news or potentially bad news based upon the situation over in Saudi Arabia. But as we can see, big move up in crude oil prices today, which should have put us on an alert that more than likely, if there's a big move in crude oil prices, watch your crude oil stocks. That's just kind of a simple observation. So now, because there were situations or charts already setting up, for example, VAL started having buy signals coming out of this area, consolidated here at the 50. So didn't have any reason to sell this position. So you were in the right place at the right time. P10 was another one that we recommended a while back. It didn't execute. But now at least we can see what type of pattern was setting up or is setting up. Here's your Bobble breakout. Where do you think your next target is likely to be? So because we can see what the reaction was to a world circumstance, at least we know when to be, what to do after that type of candlestick formation. Or, as we saw in NVAX, this was recommended because you could see, obviously, they were supporting here at the 50. A bullish left-right combo, kind of a bullish doji sandwich. Now we had an 18% up day. So this is what, this is kind of answer the question, can we still be buying here? And the answer should be, where should we have been buying? What should we be looking for? Or what identified the place to be buying in this situation or in this chart? Where was the time to be buying? Down here, there was kind of a scoop. Best friend, doji, gap up off the 50 up through the T-line, putting us in an uptrend. Did you talk about a stop? Well, if the scenario is, if this is moving this magnitude, as this magnitude over here, we're probably looking for a move up into this area. Where would we not want to see it close tomorrow? Probably back through the halfway point of that candle. So you could always put a safety stop right here. As the logic says, they open it and come down through that halfway point, I want to be out. A trader doesn't need to stop. It's going to go to the moon. But if it comes down here, which direction is this overall chart? Up. So what's your strategy at that point? Well, if you have your safety stop right here, and it trades down here, then what do? Watch your 10-minute chart. If it starts coming back up, and if this was your 10-minute chart, and it starts coming back up, you can always buy back. Why would you buy back in something that's pulling back? Because the overall gist of this price move is that there's still more upside. So where do you put your stops? What is our basic analysis of price moves as professed by Japanese rice traders? Where do most people buy? They start buying exuberantly at the top. What gives you a message or an alert that they're buying exuberantly at the top? That gap up. So that gap up is telling us we better start watching. We better have a safety stop somewhere. That tells us, oops, that was the exuberant buying. Get ready to take profits on any selling. Oh, we're playing around with this little one. Because of the pattern, you can see what's happening. You got kind of a fry pan bottom. But you can see what's building up to the point where now you're back, you're above the 50 and you're in this breakout area. Now why is a breakout area or a gap area important? Because what's the usual logic of people that had to, that were buying, and came down here? What are they thinking? Man, if it gets back up to where I bought it, I'm going to close this one out. That's what creates overhead. Well, if there's no overhead up here, nobody to say, I'm going to sell when it hits this level. Where's your next likely target? That's why people always say the price will usually come up and fill the gap. Using options, I might as well sell it. Bought it in your recommendation. Neil, and which one was that? Yeah, you always have to put which ones you're referring to. So here's the nice thing that I keep reiterating, that if you see a pattern setting up, they've got three benefits. First of all, you can recognize the pattern. So we know there's expected results. Two, even when the market is not working well in general, a pattern is usually going to continue because that's what created the pattern in the first place, was a buildup of investor sentiment. And three, knowing that if this pattern works, it's probably going to have more excessive profits than just an uptrending stock in an uptrending market. Using options, I might as well sell it. I don't understand. Bought in your recommendation. On this one, on Val, there was another one. This is what we recommended this today. It was the J-hook pattern. So even though it opened up here and pulled back, it's still a J-hook pattern. And the same on P10. So things like this that are still in an uptrend, all you can do is stay long. And notice how he did kind of a little evening or morning star on SLDB. Where do you think your next wave is going to take you to? Probably up here to the 200-day moving average. And this one is just a picture-perfect chart setup. There's your fry pan bottom. There's your dimple in the fry pan bottom, which means from here to here is going to be about the same from here to here before you see the breakout. And where did the breakout occur? Right smack dab where this pattern started. And how did they break out? They gapped up through that level. Now what do we expect creating the classic pattern? Your fry pan bottom, which creates a strong price move, the consolidation, and what's the prerequisite for your J-hook pattern? A strong price move. Now you got the prospects of another move to the upside. Hold on to your individual ones, Carl, until I get done, or I'll get all confused and we'll be here all night long. Marna, only one thing to do here. Stay long as it stays above the T-line. DY, another one. J-hook pattern, been working well. It broke through the 50. It broke through the 200 today. Where's the next likely targets? Well, where everybody else might be watching. This might be one. This might be another. This might be another. So, now what are the other elements that we look for? Well, when they break through resistance levels, they have a tendency to come back and test them. So, if you did see a sell signal up here, then get ready for it to see if it's going to come back to 200 and see if the 200 will act as a support. That's a good chart. I think I've already got that written down, so we'll come back to that one. Sonu, J-hook pattern that has stayed above the key line. CGC, a J-hook pattern setting up. If this starts trading positive tomorrow, where do you think the next likely target's going to be? Here, filling this gap. So at least that's something to watch for, because you've got a pattern setting up and you've got a very clear target. Cena, price setting up. Now you watch with the doji right here to see whether it's ready for the next leg up, or if they close it below the T line, you close it out. So anytime you're in an uptrend, you see a sell signal to close below the T line, that tells you there's been a change of investor sentiment. Close out the position. That's POD, PDD. CLDR is getting there. Whoops, they're getting there. Opened on the T line, came back up. If it opens positive, what do you have going on? Another J-hook pattern. Expect it to go to the 200. And 3 was recommended based upon this breakout. Doji, gap up or close above the T line. Where's the likely target? Back up here. So the reason I'm pointing these out is these are the ones that we've been recommending over the last few weeks. And the evidence is they continue to work as long as they maintain the rules that we kind of established, that stay long as it stays above the T line. So this is home The belt hold signal further upside, not quite a sell signal, but now look what's happening. So this is why you always want to be aware of what your signals are telling you. Little shooting star. You're in the overbought area. If it opens lower, what's that telling you tomorrow? It's starting to take profits. Maybe that's a good place to start closing out long positions. And Micron, another one that opened lower today. Let's get this. Oh. If it opens positive, yeah, your J-hook pattern is in progress. So let's say you like trading Micron, but you didn't want to buy it here, didn't want to buy it here, didn't want to buy it here. Now, even if you didn't want to buy it here, it's much more viable to be buying it here because you can see the pattern setting up after the profit taking. And Reggie, there's your fry pan bottom. There's only one real criteria at this point, and that's stay long as it stays above the T line. And we also have the visual, but as long as it's staying above the 3T line, shows you the bullish sentiment is pretty well in place. So this gap up today, why it's doing that? Well, something's broken. But the fact that they gapped it up told us that was a place where everybody was going to be paying attention. So that's where you go, and I'll go get to the oils here in a little bit. So as far as the big traders, Nugget looks like maybe the selling had stopped. There's your bullish Harami Doji. So if you've been shorted on Nugget with a bullish Doji Harami in the oversold area, very simple. If they trade back up above today's high, you probably want to close out that position. Labu, pretty much telling you that ever since the bullish engulfing breakout to the upside, it hit the first target, but a lot of juice left in the stochastics. But what's this overall tell you about the biotechs? Apparently the biotechs are picking up steam, so that's probably a good area to be looking for good trades. Apple, uptrend still staying above the T line. However, Amazon gapped down, that one. So what do you have going on here? Well, you can see there's kind of a trend resistance. So there's a good likelihood they could be coming back down to test the 200. So, simple observation, you probably don't want to be long on Amazon right now. I don't know whether you want to go short, but the worst case scenario is if it comes back to the 200, you watch for buy signals again. Netflix was having a hard time getting going. See, there's a big rounding bottom. You have a bullish doji sandwich, another doji. You watch to see whether it trades positive tomorrow. That's telling you this trajectory is starting to change. Investor sentiment coming back in. Facebook, though, doesn't have anything worthwhile. It's failed at the 50. Now it's got almost a bearish doji sandwich, at least the resembling that, which means if this opens lower, the blue ice failure tells you there's a good possibility they're coming back down to the 200. So that becomes a good short setup. NVIDIA, nothing here to really grasp onto. Now, if it starts trading positive again, another J-hook pattern with the evidence that the T-line was in the process of holding. Tesla, observe the obvious. Shooting star doji, selling. Where do you think they're going to sell to? At least back here to the T-line. or back to a level that everybody's been observing. Broke out, did a bobble breakout through the 50. What happens when they break out through a resistance level? They usually come back and test it as support. Now, because we can see what the investor sentiment would be when it got back here, if we saw a hammer, a doji, some sort of buying, that's a pretty good piece of evidence that they broke through, came back and tested it. If it supports, where do you think your next target's going to be? That support there at that level becomes a very high probability entry point for good trades. All right, some other ones that are looking good. Just Energy Group has good volume. You can see kind of the fry pan bottom. GXMD, nice fry pan bottom. So this is why you watch where the pattern starts, because if it gets through there, where your next target was going to be. So the fry pan bottoms just allow you to see the setup visually and watch to see what happens. If I was buying on this one today with the expectation it was going up through here, back below that level, now what's my criteria? It better open positive and trade positive. If it opens lower, what's that tell me about this resistance level? It's still acting as resistance. Cars, nice fry pan bottom. First target, second target. And the J-hook patterns are working very well. Again, when you start seeing consolidation, and then they can trade back up through this level, at least you know what your next target's going to be. AR, kind of that same scenario. This is your bobble breakout. Best friend, gap up. So you can be buying this one with the expectation you're going to have more upside because of the bobble breakout, number one. And number two, how did they start the bobble breakout? With one of your strongest reversal signals, the best friend signal. DVA, J-hook pattern. Once again, notice your doji gap up off the T-line. Just kind of expect more upside from this one. COMM, this is kind of your bobble breakout. Notice when they pulled back after failing to go through the 50, look where they supported, right smack dab on the T-line, with, again, the reiteration that nobody has the T-line on their charts. So this natural support and resistance level is obvious to us because we do have the T-line on there, but 99.99999 somewhere, many now around the world, people do not have the T-line on their chart. That means it acts like a natural support and resistance level. CVI, there's your bobble breakout. There's probably your next likely target. Then there's a gap to fill up here. Just a high probability trade setup. That whenever you see a bobble breakout, this was a bobble breakout. Oh, put another one. I'll find it. OPTN. There's your inverted hammer doji, Morningstar signal. Close above the 200, bobble breakout. You definitely want to be buying this one on positive trading tomorrow. So again, the oils are an obvious spot because of crude oil prices. A bobble breakout on CRC. First target. UNT, fry pan bottom, started in the uptrend. How? With your best friend signal. You're buying this one, you just watch make sure it gets through the 50. We did whiting. If it opens positive tomorrow, telling you you've got a best friend signal, kind of a fry pan bottom, breakout to fill the gap up here. Again, this best friend signal is one of your strongest signals telling you there's been a dramatic change of investor sentiment. RES, best friend signal. Little slow curve, bobble breakout. Next target. And ECA, same scenario. Best friend breakout. That's not ECA. What's happened here? No wonder it looked familiar. Best friend breakout of a fry pan bottom. First target. I know some people are following Maxar. Maxar right now is right there. Even make it a little bit more exacting. Right there. You stay long on this one. CVM. Breaking out. Right there. So again, here's kind of your wedge breakout to the upside. Oh, whose handwriting is this? Wait a minute. Something's happening here. Something's happening. Oh boy. All right. We looked at this one before. So there's your bobble breakout. This is why we got our eye on Dana. So there's your potential bobble breakout. And Mio, there's your bobble breakout. Where's your next likely target? Up here. Just because they did a breakout of the 50, which in our case we can see that's a bobble breakout, but there's a lot of people saying, oh, if I break through the 50, I'm buying because it's going higher. We already know that just based on the pattern setup that broke it out. Kind of another bobble breakout on AERI. This one can be bought on Positive Trading tomorrow. I don't know what's happening there. That is a symbol. And GSKY, there's your slow fry pan bottom. There's your doji sandwich. There's your first target. There's your second target. Again, put yourself in situations where when you can see the pattern set up, you know the signal that's breaking it out, you've got much stronger probabilities that you're going to be in the right place at the right time. On the sell side, look at the left-right signal on Planet Fitness. And notice what happened when the sell signal kicked in. Haven't been able to get back up above the T-line. GM, look at your signal here. Now, I always tell people don't spend a lot of time trying to learn the other 50 or 60 signals other than the 12 major signals, but it's always good to go back through one of the books and look at the other signals, just so you're aware of them. So look what happened here. Overbought condition. This is GM. Was there some inkling of the smart money? There might be a strike, probably, but look at what our signal is. This is what you call a two dark crows. Opens here, closes down here. Gaps up and opens down here. That's your two dark crows, and then they gap it down. So now what's our next evaluation? Potential of coming back down into the trend channel. CODA, bearish ticker signal. Where do you think your next likely target could be? Down into this trend channel. Why is that such a strong sell? Because of the kicker type signal gap down. Best friend gap down. If this opens lower, at least you can figure it's probably coming back down to the 50, possibly the 200. So what do we look for if we're ready to go short on this one? If they open it lower tomorrow and start trading it lower, that means the sellers are still there. What is an octopus group? I don't know. I just can't get my arms around that one. Oh, man, what a funny guy. I have no idea what the octopus group is. And Children's Palace. Look where it failed. Right here at the 200 with a doji bearish confirmation through the T line. Where do you think your likely target could be? Down here someplace. That's right. And then you saw what happened to ACB. And this is your bearish flutter kicker. They're coming out of this one with great force. So this is again the benefit of knowing what the strength of a signal is. Look at your bearish engulfing right at the 50, gap down. Where do you think this might have as a target? Down here somewhere in this trend channel. And SPB, left-right combo, gap down. First target, second target. So there's always good things to look for as far as long and short. When your market's kind of gotten a little bit iffy in the overbought area, maybe you want to have a couple or a few short positions in the portfolio as well as long positions. Now you can at least pick your sectors that may be things that are influenced by the NASDAQ, looking for long positions, things affected by the Dow, you might be looking for a few short positions. Oh, so this being a Dow stock, hey, might short this one. Okay, so we're in a market condition where we suspected there could be some backing and filling as we started losing steam, and that would have been further confirmed by the doji rule of which way they opened it after a doji. Could there still be some weakness in the Dow? Yeah, now at least the assessment might be that we're heading back to the T-line area. Okay, that's about all I got tonight. You'll probably see, not that one. Probably see this one as a short. And Children's Palace, you might have that as a short also. And then there was a couple of longs. Oh, of the two longs that look attractive. Is that Obel breakout on OPTN, and then another oil stock, that kind of fry pan bottom breakout with, if it moves up here, that's a good 2.5 points on a 675. That's about a 40% upside. Oh, from Francio. All right. That it might have, it's seasonally, might be coming back up. Yeah, I just like this. And the fact that they got up through the 50 today. Strong move from here. Wouldn't have any upside. It could fill that gap. So I'm pretty sure if you look at this, and I don't know why I don't have the volume over here. I don't know why I can't put the volume. Same. Sorry, close to it now. But if the volume is picking up, that means a lot more interest is coming in. Okay, so with that, are there any general questions on candlesticks? All right, if not, Jim, go ahead and do the double line. What is a blow-off day? That's when you see, what could I illustrate? There was something that we saw that was doing a shooting star. That wasn't it. Wow. The K. Consider a blow-off day would be a day like this, except let's say this did a shooting star, and let's say the volume was huge. That would be kind of a blow-off day. That's where all the enthusiasm comes jumping in, and then the smart money is starting to sell off, and it did it on big volume. That means that probably was a blow-off day, meaning that was the final gasp of that uptrend. Same thing on the downside. If you see them gap it down, there's big, huge volume, and it ends up as a doji or a hammer type signal. Because of that big volume, that's usually where all the panic selling was occurring. So it's a combination of seeing a strong reversal signal and big volume on that day. GBPN, if you're short, you stay short, because you can see when they popped it back up, they couldn't close it above the T line. I'd look for it to see if they're going to bring it back down and test the 50 one more time. Kind of the same scenario here on Goodyear. When they come up to a resistance level, they usually come back and test it to see if it's going to act as support. So if I was long, and tomorrow they open this lower and start trading it down, I'd close it out and then wait to see what it does, probably back here at the 50. Shopify, this is kind of your meeting line. Notice how they opened it here and closed it here. And then they opened it here and almost came back to the same level. Now the true meeting line would be exactly at that level. Now you still have to see bullish confirmation for it to be a reversal. If they open it lower, this was just kind of an up day during a downtrend. And Chipotle, it's got the potential of basing in here. You can see where the buy-in occurred today. So if I was short, if it opened positive tomorrow, I'd probably close out the position. I wouldn't be a buyer. Is Val a recommendation? Never heard of it until you mentioned it. It wasn't on any list. Let me see. Yes, it was recommended on Thursday the 10th. That's why I've got a date on it. Where should I sell it so I'm able to set an alert? On Val, well, that's going to be pretty much I still would be a buyer of this one on positive trading. Probably wouldn't want to see it trade back below today's open. But you basically have kind of a fry pan bottom, J-hook type pattern setting up. Oops, I thought I scrolled. Okay. BCOR, another one you can get ready to short. Again, where do most people buy? They buy exuberantly at the top. What told us that this might be exuberance? Because you were in the overbought area and they gapped it up. Then the next day, when they opened it back below the open of the previous day, first of all, what should you have been watching for with a gap up in the overbought condition? Expecting more upside. But with the gap up, you also have to be aware that this is where the exuberance is coming in. Get ready for selling. The fact that they gapped it down and started trading in this direction should have told you right away to get out of the trade and or figuring out if you're trading it, if they opened it below the previous day's open after they gapped up and started trading it lower, where do you think it was heading to? At least back to the T-line. That one you can still short on weakness. Where's your expected target? Right down in this area. MNK, not anything rambunctious just yet. Now it is still holding up above the T-line just barely. But if you had bought it on this day, I would have sold it here. Because the probabilities are if you see a big day and they close it lower the next day, you don't want to be in it until they get back up through this level, the close of that first day. Just kind of a statistical rule of thumb. AMAG is in a bobble process. A sign that would have led you to get back in, it ended up running up even higher in the afternoon than it did in the morning. On KPTI, this is why I usually wait for the end of the day. Now, if you took profits up here, that was probably the right thing to do, because I would have gone to the 10-minute chart. Oops, it looked like it did it. Ran up and then started pulling back. Yeah, that would have been a toughie. Usually if they spike up and then come back, but this was kind of a, now if you see something like this where you're seeing a lot of exuberant buying and you know that your 10-minute chart or your 5-minute chart, you're moving away, or on the daily chart you're moving away, yeah, probably take some profits. Now, to pacify myself, if I don't know whether I should be taking profits or not, but I've got the other pieces of evidence that maybe they're in the exuberant stage, I close out half the position because that way I can rationalize that I've done something right during the day. Now, to get back in, now your next question is this the best place to be getting back in, or am I only getting back in because I'm hoping that I didn't miss the whole move? If I sold out a position up here and I still wanted to pacify myself that there might be more upside, but I'm in a high risk area, maybe I come back in with a half a position. Or maybe I go to the options and buy options, an option spread up here, kind of using my risk a little bit. Yeah, AR, that's a good looking chart. McDonald's, stay short. It didn't hold this level. Getting toward the oversold area, but if you're short, I would stay short. And DVAX, nothing here. Which way is this going? No idea. I'd go someplace else. SunPower got at least the prospect of it coming up through this downtrending channel right here off the 50. I'd be a buyer of this one. If it came back up, let's say through today's high, that would tell me this little downtrend is being breached. United Air, another one where when it gapped up yesterday, you could see how far away you were moving from the T-line. That would have been a toughie to get out of. But the fact that it opened right here on the 50 and the T-line and then started trading up, you stay long, but I'd have a sell stop just below today's low, which would also be the 50 and the T-line. If it comes back down through there, it's telling me the sellers are now in control. Pepsi, not a good looking chart. If you happen to have been long for some reason, with it closing below the T-line, I would have closed it out. There's your next likely target. But the percentage move isn't all that fantastic that I probably wouldn't be in this one right now. Long or short. Tyson Foods, this one you can get ready to buy. There's this kind of gap up. There's a wee little teeny gap right there. That's probably where they're heading back to. We did Maxar. Stay long on this one. It is right at a breakout level over here. Rig, another one of the oil stocks, doing well. I would suspect with this little gap up, if the oil prices stay up for the next few days, this one has a good chance of getting to the 200. Cisco, all you can do with this one is stay long. However, we've had a gap up doji, a hanging man, a doji, little nothing day, but it opened slightly lower and traded up. I'd put a sell stop just below today's low, because if it comes down through there, that means they're coming back at least to the T-line. The Russell was reasonably well or reasonably good today. That's telling you the small stocks aren't selling off. Silver popped up a little bit. I think this is October silver. Yeah, popped up a little bit, but now selling off again. So right now, silver's having a hard time as far as the commodity getting back up through the T line. And Roku wouldn't be long or short. Nothing on that chart to indicate which way it wants to go. CTL, you can stay, or oh, Todd, Todd, are you in here tonight? I see him. Yeah, if you bought some today, bouncing off the T line, it has to open positive tomorrow to want to stay in it. Electronic Arts held at the T line. Uptrend still in progress. Org, Briggs and Stratton, stay long. First target, you're in the gap area, so you stay long, but put your safety stop just below the T line. SWKS, another one that with the doji today using the T line as support, definitely need to see this open positive. And Twitter. Right now you stay short until you see a buy signal. Right now you don't even have a buy signal, let alone a close above the T line. And Wayfair, this is kind of obvious that they're probably bringing it back to the 50. They came up through the 50 as a resistance, resisted at the 200. Now watch to see if they bring it back down to the 50 and then try to do a J-hook pattern at that point. Zenga, you can still, as you can see, it's in a fry pan bottom. If you're long, you stay long, but obviously you want to watch to see what it does up here at the 50-day moving average breakout level. Coop, boy, another one that might be basing off of this little support level. If you were short, I would have covered the short today, but right now that means I wouldn't be long or short. And SOX needs to open positive to tell you the T-line's acting as support. CBYI. It's trying. I mean, as long as you stay above the T-line, it had to trade positive today. Yeah, you stay long on this. If you're thinking of buying, you can still buy this one on positive trading tomorrow. And Workhorse, another one you can get ready to buy on positive trading tomorrow. And just use the T-line as your stop. Fluor, stay long. Use the T-line as your stop. It shouldn't break. This fry pan bottom shouldn't break the T-line trajectory. Overstock. That kind of shooting star when it opened lower today, if it opened positive, or if it opened and started trading positive, which we can find out whether it did or not, opened and started trading positive, when it came back down through the open, that was your sell. That's what got you out of that trade, because where were they heading? At least back to the T-line. Now they've come back down to the 50, so you just have to watch to see what it, if they might have been a blow-off day. Okay. That could be, let me do this. That was on Overstock. Yeah, yesterday had big volume. I can move this over to where we can see it. Look at the volume yesterday on Friday. Big volume. Kind of a shooting star signal, failure at this level. Yes, that's what you kind of call a blow-off day. Yeah, you can see it on an intraday basis also. Ribbon, just stay long. It broke out through that level. Yeah, I would suggest it's probably coming back up to that trajectory. XON, you can see the little J-hook pattern still in an uptrend, kind of broke this resistance level. Now, if you're long, you stay long. If you're thinking of buying, one definitely see it get up through the 50-day moving average. And Uber, you're coming up, but you're running out of steam on your stochastics. So if you're long, you stay long. You just have to watch it. Now you're getting back up in the overbought area. You've got upside, but it probably wouldn't be my first pick. Yeah, KPTI gapped up in the overbought condition. So have your safety stop at today's open. It shouldn't come back to that level. Ever, that's a good little J-hook pattern also, especially if they break it out through that level tomorrow. They're still heading toward this trajectory. CEQP, another one that broke out today. So if you'd bought it yesterday, it had to open positive and trade positive. If it had opened lower, what did that tell you about this level? That was the resistance level. Intel, another one that got up to the resistance level. And then what did you have? A doji, bearish confirmation, at least coming back to test this level. If it fails here, where do you think it's going? The gap area right down here at these moving averages. Southwest. There was your gap up in the overbought area. What do you start watching for? Selling. In this case, they opened it back down here on the T-line and brought it back up. So you want to watch to see if they can get it up through here, because now you've got basically a fry pan bottom with a belt hold type signal. Was it Dominion? Nothing of, oh, you meant HD, okay. So say that's not. You saw the Hanging Man, Doji, Shooting Star, Doji, sell-off. If I had been long, there would have been my stop at the low of, because if it came back down through there after this many sell signals, it's telling you they're coming back here. Now you have to wait to see what it does from this level. I have a core set of positions. And want to keep a looser trigger on selling. Could I use the T-line on a weekly chart as a stop? Obviously you've got Microsoft as a long-term hold. Because right now I wouldn't trade Microsoft. There's just no direction to it. So even if you went to your weekly, it might be telling you with it trading back below the T-line, it's time to get out. But if you don't want to get out because you've got tax consequences, this is where you start looking to say, all right, maybe I sell some calls, write calls against my position. So at least I'm making some money, even though I know it's backing off. Lockheed, still an uptrend on the weekly. Still a good uptrend on the daily. So you can use it as your stop, but usually what happens is the longer this trend persists, go back to your longer term support level, which is probably the 50-day moving average. And UVXI, if you had been short, what was your safety stop? Shouldn't trade back up above the high of the doji. So I would have stopped out today on a short. Would not be going long just yet. JP Morgan, I thought somebody downgraded it today. Now, if you're long, we'll look at, again, what happened in the overbought area. They gapped it up. Now look where your doji is, at the back, or right down here at the open of JP Morgan. So if you didn't stop out today, you should have your stop somewhere down here. Because if it opens lower, where do you think it's going to after they've gapped it up exuberantly at the top? They're probably coming back down to test the T-line. Okay, I think I saw that the pre-market futures were up about 30 or 40 points, which doesn't mean anything this time of night. But we haven't had anything yet to show us there's a major change of investor sentiment. Just some backing and filling. So what we would like to see to kind of confirm that is the NASDAQ opens positive and trades positive tomorrow. Okay, with that, everybody have a good evening. We will see you bright and early tomorrow morning. We'll see you then.